So the question that everybody wants to know is, when will the stock market stop going down? Every day you check the markets, it just seems like the market is headed downward, and it's really a tough time period for long-term traders. So let's actually consider when the stock market, whether it's NASDAQ, S&P, Dow Jones, and crypto, when they will have their bottoms and a new bull market can come back again. If you're curious about this, smash the like button and subscribe, because this is going to be a great one. So when we look at when this bear market began, it all started when Powell started talking about inflation, said it's transitory, then he's not saying it's transitory, then he started becoming increasingly hawkish. He started talking about, we're going to raise rates, but it seemed like it was going to be maybe a quarter here and half a point there. But now we're starting to see 0.75% raises in the interest rates, and now even a full 1%, which I'm not sure that it was ever done before. But the problem with the idea that a new bull market will begin is that the Fed is nowhere near changing this aggressive interest rate policy. They really are going to continue. And in fact, one can argue they haven't been bold enough, because in order to actually tame inflation, this is called the Taylor rule. The interest rate must be higher than the inflation rate. So if the inflation at the moment is around 8.5%, it means that the Federal Reserve rate needs to be around 9 or 10. And here's the thing, no one actually believes that the Federal Reserve has the stomach to actually do that, because if you actually raise rates that much, you start getting to a point where you start starting to break things. Certain banks or finance institutions may start to break. We also may start seeing huge job losses, and there's an open question as to whether the Federal Reserve is willing to go that far in order to tame inflation. So some people have actually suggested that what the Federal Reserve is going to do is they're going to secretly change their mandate, in the sense that, well, 2% inflation, that was a nice goal, but we actually think in our current era maybe 4 to 5% inflation is acceptable. And if that's done, of course they can then pivot a lot earlier if it no longer is true that they're trying to reach for 2% inflation. Or my own view is it's possible that the Fed may try to change the way that they calculate inflation as a way of making it look like it's lower than it is. I mean, they have done that before, and it's possible that they will do that again. Now, if you look at cryptos, so many people in January, February thought, oh, I'm buying on a dip. And I told everybody on my channel to sell in. The problem is, on YouTube, everybody wants to be bullish, because a lot of people actually become really bored when you start saying, you know what, things are just going to go down and don't buy anything. There's some channels that are always telling you to buy, and they really are not looking out for your best interest. Unfortunately, they just think, and they say the craziest thing. They say, you gotta buy now, because when the bull market begins, things will go up 50 or 100%. Meanwhile, a lot of the stocks they had picked in the past are down 70-80%. One is down like 100%. So I really don't see the idea you need to rush to buy anything in a bear market. I think that you're doing just fine by sitting on cash. You're able to preserve your psychological stamina, and I think that that's a good thing. Now, there's a Bank of America analyst, I believe he thinks that the bear market will end in October, in like the middle of October, and I think that he's predicting that you will see like a huge crash, and at that point the market will reach a low and it will rally. I don't know if he means that that's going to be a new bull market, or he just thinks that it's going to be a nice end of the year rally. Now, usually at the end of a bear market, there's what's called capitulation. Basically, it's a real clear signal on the markets that there's extreme bearishness. Everybody is selling. There's massive volume. You saw this actually in 2020. You saw it in 2018. You saw it in 2009 at the end of the bear market. You saw it in 2003 at the end of that bear market. There's usually massive selling because everybody said you know what, this market is never going to go up again. I got to sell everything. So you get a massive volume, you get a huge move down. The VIX goes anywhere from 40 to 60 for a period of time. And that kind of is like a contrarian indicator when everybody says, oh, the market is terrible, and I'm objectively taking actions to sell this market, and it sometimes gives you a good opportunity. But right now, you're kind of getting like a what they call an orderly move down. Like the market is going down, but doesn't look like there's any kind of a extreme panic. To be honest, it's kind of somewhat reasonable. And I think that for that reason, the Federal Reserve is in no hurry to try to fix things, because they just think, well, as long as it's orderly, moving in an orderly fashion, we're doing our job. They actually happen to think that if it can cause your home to go down in price, the stocks to go down, and your crypto to go down a lot, they think that this will also decrease inflation, because they think it's kind of the reverse wealth effect, that as you start to feel poorer, you probably spend less money, and so there's less demand. So there's an open question as to whether that's working or just making people poor for no apparent reason. My own view with regard to these interest rates is that yes, interest rates should have been raised, but they should have been raised a long time ago. You should never have kept interest rates near 0%. Since literally 2009, interest rates have been very, very low, and they've always been afraid to raise it. And now when you raise mortgage rates like 100% in 1 year, that's pretty extreme. I think that it could have been done a lot better than they're raising it so dramatically. And that's one reason why I just don't get the sense that there's any catalyst for stocks to go up on their own. Think about it this way. You have borrowing costs going to the moon. And what is that going to cause? It's going to cause a huge recession. In fact, I don't think there's any example where the economy is able to just do very well when you raise rates at this low. In fact, usually when we're raising rates like this, it's usually because we're in a good economy, not a bad economy. So you have a weakened economy, the economy is getting weaker, and they're raising rates. That's a little strange. But then some people right now are still pointing to the good things that still exist in the economy. Oh, the unemployment rate looks good. Well, guess what? The unemployment rate always looks good right before it starts to get bad. Like the economy, as the economy starts to weaken, the unemployment rate can actually skyrocket rather quickly. So as you get these added costs that start to infect the economy through the higher interest rates, I expect that the unemployment rate to go up, and that will impact consumer confidence, and will cause a lot of these corporate earnings to go down. So where's the growth story? You have China that's locked down. They don't seem to be interested in trying to turn their economy around. You have in midterm election years, it's also true that usually the market is pretty bad for at least before the election. Usually that's where there's a lot of confusion and uncertainty. But there isn't quite a growth story at the moment. Taxes are not likely to go down over the next 2 years. Interest rates are going up to the moon, and it just doesn't seem as though we're seeing anything that makes things a lot better. Even look at the biggest companies on the planet. Apple, okay, they released their new iPhone. I bought it, and they also released a few other products, but none of them were revolutionary. You didn't get the long lines that you did when they first introduced the iPhone. So even for the biggest companies, just in terms of their products, they haven't done anything super amazing that would actually cause customers to line up out the door to buy their items. So we're in a strange situation where things are going to slow down. That might actually be a good thing, because you can't have an economy that only rises. You need some bad years as well in order to get rid of the excesses that happened during the boom times. Because actually, if you don't have any kind of downturns where the economy is able to get rid of the excess, eventually you get a way worse result, like some kind of huge bust. And I don't think that's something that anybody wants. So we should welcome a downturn, one that actually allows for a clearance of a lot of excess, a lot of the bubble prices in a lot of items, whereas crypto or real estate or speculative stocks like Shopify and the ARK ETF, and that's a good thing in the end. We should welcome that. So try to stay in cash. There's no need to rush to buy anything. I'm not recommending any stocks, any ETFs, just cash. It's the only thing you need right now. Anyway, I hope that this video has helped you save a lot of money by avoiding the stock market for now. Subscribe, hit the like button, and I'll see you in the next video.